Hey guys, Justin Bennett here with Daily Price Action, and in this video I want to talk about support and resistance, which is arguably the most important thing that you can become good at in order to become a profitable trader. Alright, so I've always said that if you get this right, everything else becomes effortless, and if you get it wrong, your trading experience might be pretty frustrating. Alright, so with that said, I want to go ahead and jump into it. And what I do when I go through my charts and I'm defining levels, all I really do is go through the highs and lows in the market and just start marking the level, and then I go back about maybe 3 or 4 months just to see how that level lines up with previous price action. So if we're looking at the pound USD here, and we can clearly see that the market has been in this uptrend for some time. And markets like this, I will say, make it pretty easy to define levels because we do have these nice swing highs as well as these swing lows at which we can look for support and resistance. Alright, so the first level that I want to take a look at is going to be this swing low down here. Now what I do is I just place the level on my chart. I'm not looking to refine it at this point. I just want to get it on my chart. So now if I go back and start looking at previous price action, I can clearly see that this actually lines up really nicely with resistance back here and these swing lows here. Okay, so this is a great level to have on the chart. Alright, so if I move on, all I simply do is go to the next swing low, and I want to look at this level. Again, I'm not worried about refining the level just yet. What I'll do is come back here to this cluster you see right here, and I'll just zoom in and start looking at highs and lows. So what I'm looking at here, if I place my level right there, what I'm looking at is this high, we have this tail, this low, another high here, and then 2 more highs right here. So this level looks pretty good. It does get a little choppy through here, but this is still a level that I want to have on my chart. So moving on, I want to go ahead and check out these highs up here because again, it does stand out. It's a swing high and it stands out from the surrounding price action. So if I draw my level here, and again, not worried about getting it perfect at this point. Alright, we can see that we have multiple highs, and it does look like we also have a low back here. Alright, so if I zoom in, we can see that we have multiple highs through here. And if I scroll over, we can see that we also have a swing low here, another swing low here, some highs here, and another low here. So this also looks like a pretty good level that I want to have on my chart. Alright, so if we move on to this high up here, alright, I can immediately see that we have this high lining up with this low. So this is another level that I want to have on my chart, and it's an area that I can watch for even now as price is starting to retrace some. I can look for price or the market to come back down to this level and possibly look for a price action buy signal down here. Okay, so that's basically it, guys. Those are really the key levels that you want to have on your chart. There are other levels in the market that you can put on your chart, but I really try to keep it pretty simple because if you get too many levels on your chart, it becomes really confusing. First of all, it's hard to see the price action, and secondly, it becomes hard to even place a trade because before you know it, you have support and resistance levels that are 40 pips apart. And it's really hard to trade on the higher time frames when you only have 40 pips to work with. All right, so that's it, guys. Go ahead and start marking those levels on your chart, and I'll talk to you soon.